Welcome to Natural Gas World's weekly overview of the news in the global gas industry with me, Joseph Murphy. In this week, antipathy towards upstream development in Europe has been growing in recent years. And this week, we looked at a new pledge by the new coalition government in Ireland to halt the issue of new licenses for gas exploration. This represents a shift in Irish policy, as the previous government last year banned the exploration for new oil reserves, but said the search for new gas would continue as gas is considered a transition fuel. Ireland now gets 60% of its gas from Corrib and a handful of other key deposits, but these are now mature and output is falling. The industry has dismissed the government's ban on gas exploration as virtue signalling, using these because it will leave Ireland ever more dependent on imports in the long term. Using these imports actually increases Ireland's carbon footprint due to the transportation carbon cost, the Irish Offshore Operators Association has said. At the same time, Ireland is clamping down on the development of new LNG import capacity, ruling out ones that will import fracked gas, i.e. US shale gas. This is bad news for ventures like New Fortress Energy's Shannon LNG import terminal, which is already years behind schedule because of environmental opposition. Over in the UK, Premier has given up on a plan to increase its ownership of the Tolmont gas project in the North Sea by acquiring a 25% stake from South Korea's Dana Petroleum, but a larger deal to acquire assets from BP in the region has been cleared by Premier's creditors. We've seen a number of North Sea M&A deals agreed before the oil price crash either fall through or undergo significant revision in light of a dramatic shift in the market's outlook over recent months. In the case of a BP deal, the purchase price was cut by around 2/3 to $210 million. We're expecting to see that close by the end of September. In Germany, Parliament this month voted to phase out coal-fired power generation by 2038. This is good news for the gas industry of the country, but critics say Germany could make the move away from coal much sooner and that the government needs to do more to spur the development of new gas-fired capacity to replace the coal stations going offline. Meanwhile, leading German energy companies RWE and E.ON have completed the final stage of a $25 billion asset swap agreed 2 years ago, with RWE regaining control of some gas storage and renewable assets from Innogy, a subsidiary it previously transferred to E.ON. Over in the US, Dominion Energy has announced a transfer of its gas transmission and storage business to an affiliate of Warren Buffett's Berkshire Hathaway Group in a deal worth $9.7 billion, but we'll also see Berkshire take on $5.7 billion of the company's debt. The news comes as Dominion and partner Duke Energy announced the cancellation of a $8 billion Atlantic Coast pipeline that would have pumped up to more than 1.5 billion cubic feet per year of gas to the US Southeast and the Gulf Coast. The decision follows a long saga of legal and regulatory headaches, which the project endured because of concerns over its environmental impact. The partners had worked for 6 years, investing billions of dollars in the venture. Finally, Iran said on July 1st it had resumed gas exports to Turkey. This is after supplies were halted at the end of March after a pipeline explosion in the country. Tehran had accused Ankara of intentionally delaying repair work on the pipeline in order to avoid taking gas while it was under a coronavirus lockdown. Even before the pandemic, Turkey was significantly cutting down its pipeline gas imports, not only from Iran, but also its former largest supplier, Russia. Replacing Russia in the top spot now is Azerbaijan due to the ramp up of supplies from the Shah Deniz field. But as has been the case in many European markets, in Turkey, pipe supplies have become uncompetitive next to LNG imports flooding the market. LNG prices are now at a record low and are expected to remain that way for some time, meaning that this is a trend that will continue. This has been it for Natural Gas World's weekly overview of the news in the global gas industry with me, Joseph Murphy. Thank you and see you next time.